Hey everybody, today we're analyzing ON. It's ticker ONON, and they are a shoe company. They make premium shoes, and they just reported earnings today, so they're down 14% today. They were relatively disappointing earnings, so we're going to be going through that today. But we're also going to do just an overall analysis on this company. Let's check the 5-year chart. 5-year chart, they actually IPO'd just like 3 years ago in the September of 21, and from then it's been kind of choppy. IPOs are usually like this. They're pretty volatile, pretty choppy. And today's share price being at $28 a share with a $9 billion market cap and a price to earnings ratio of 120. Now, for TradingView, it didn't quite update all these numbers. You see Q4 is not here right now, but we will be going through Q4. So don't worry. Let's check their financials out and their annual growth. We can see that they've been growing very, very well. This is their revenue growth, and plus 60%, plus 70%, plus 60%, and then the trailing 12 months, also really, really great growth. All right. Then we've got the balance sheet. Balance sheet looks fine. Balance sheet, actually, their net debt right here is negative, so they don't have any debt. Cash flow has been positive for the trailing 12 months. This is more of a growth company where you'd want to analyze the revenue and then try and project the uh, um, the margin. So we can check out their margins on an annual basis. Their net margin here, they've got it up to 12% for their trailing 12 months. So maybe we'll use that for their net margin. All right, let's check out their numbers that they came out with. So for their 2023 yearly sales, they came out to 1.8 billion, which is not as high as you would expect. So their earnings were disappointing. I don't have their, well, actually, this is their quarterly result right here, 447 million. And if we check that compared to their last quarter, 447 million, that's actually much lower than their last quarter at 543 million. So it does look like their growth has just stagnated here, and that's why they're down so heavily. All right. Let's see here what else. Yeah, their margin also hasn't really increased all that much. 79 million in net income, and their earnings per share is at 0.25. So not great because they actually had analyst estimates right here. Their analyst estimate was 0.55, so they disappointed. They only had 0.25 for their year. And then their revenue was supposed to be 2.06, but they actually disappointed at 1.78. So yeah, big misses on their earnings and revenue. We can check out their revenue breakdown by sector. So Europe, Middle East, Africa, 488 million. They make most of their money in the Americas, and then Asia, not much. Yeah, mostly shoes as well. They do sell some apparel, but not very much, and then accessories, not much as well. Let's check out the DCF model that I made for these guys. And let's zoom this guy in. Zoom for trade sheet. All right, here is ONON, their market cap and everything. I put in the EPS estimate for 2024. Well, actually, okay. So their EPS came out as 0.25. So now I'm projecting into the next year. And based on these numbers from Yahoo Finance, I'm just going to project that they're, well, okay. This earnings model is not going to be very good for On Holdings because they are still expanding their margins. So it's best that we use their revenue growth and then we project their profit margins. So here we're going to project 20% growth next year. Okay, you might think that this might be unrealistic, but they did grow their revenue by 60% the previous 3 years. So I don't think that 20% growth is unrealistic for this company. But their market is going to become a little bit more squeezed because they are in the premium space. I've seen them all over the place. I do think that their growth is limited from here. So I did 20%, 15, 15, 10, 10, 8, and 5, and then they exit multiple at only 15, which is kind of low, but it is a shoe brand, and a lot of like consumers are fickle. They can switch their brands. There's not like too big of a moat in the shoe industry, so that's why I have their exit multiple quite low at 15. The discount rate at 0.1 because I want a 10% return on all my stocks in my portfolio. And profit margin, the profit margin last year was about 10%. And let's say that they continue that, and then maybe since they're in the premium space and their gross margins are so high, maybe their profit margins expand, right? So if they have only a 10% margin, then it's like a bad deal. But we'll say that their profit margins actually do expand up into the 20% range, because their gross margin is so high. I think that this is possible for them. And let's say that their exit margin is 20%, then we can see that it is a buy at this price, right? So we can really torture the data, make it look as good or bad as we want. But assuming that this scenario plays out, then ON would be a buy at this price after the recent drop because of their disappointing earnings. Now let's say that their growth has stagnated from here and they can't really grow very much, and maybe their margins stay the same, and maybe it's a dying business. Then of course this company would not be a buy at this point. Like maybe their profit margins stay at 10%, maybe their growth stagnates from here and they go only 10% and then 10% for a little while and 8 and then 5, and their growth just completely stagnates. Then this is a terrible buy at this price. So it all depends on what you think their growth projections are going forward and what their profit margin will end up being in the future. With them being a premium brand, I do think that they can make it up to that 20% margin. But, it's a tough call. So completely up to you guys whether you want to buy it. I think I'm going to be staying away from this one for now. But yeah, that's it for me. If you guys have any questions, leave them in the comments, and I'll try and answer them. Otherwise, hit that like button, hit that subscribe button, and I'll see you in the next one.